Thank you for tuning in to another episode of Key Factors Podcast. I'm your host, Mark Jones, and this is powered by ReviewMyMortgage.com, the largest index for mortgage programs nationally. And today we are going to be chatting about refinances. Our topic is refinance or not to refinance. That's the question. And today I'm lucky to be joined by two wonderful ladies that have been in the industry for quite some time and I believe have a pretty extensive background and experience with refinances. Today, I am joined by, first, Avery Duke with Legacy Mutual out of San Antonio. How you doing?
Good. Thanks for having me.
Absolutely. And also Dionni Smith with Directions Home Loan, and she's also the ProLender for Florida and Texas in ReviewMyMortgage.com.
Yes, sir.
How you doing?
I'm doing well, thanks.
Wonderful. So, kicking this off yet again, let's start with your experience in the refinance business. How much of your business do you focus, or your business plan do you focus on refinances?
So a lot, right? I mean, I'd like percentage-wise, I'd like at least 20% of my business every year to be refinanced because I'm really challenged by what scares me. And so when I first got into this business, I was scared of refinances. And I just said, you know what? If it scares me, I'm going to keep doing it until I'm not scared. So
I like that.
And I saw that there was a need for clients to be educated as to whether, like the question you're asking, should I or should I not?
Correct.
Right. And I've actually told people, you know what, this isn't a good time for you. And it gives me a lot of confidence in that I feel like I'm adding value in an area that is lacking.
I agree.
Right?
I agree. Dionni, how about yourself?
Well, I actually began my career in refi business. My refi business was 100% when I first came into the industry in the early 2000s.
Okay.
And my fear was purchases. Purchases were scary to me. I did not have a following of agents. My relationships were with the people that were already homeowners, and that was the basis of my business. Now it's more like a 5% ratio.
Okay.
The majority of my business is purchase business. But since I know how to put together a refi, it makes it really easy when they do come through.
Sure. No, that makes sense. And just kind of breaking up the difference between a refinance and a purchase transaction, some may think, well, it's kind of the same thing. And it really is not. With the refinance, you're dealing with one family, one person that is trying to either save money, take money out, to leverage, multiple different reasons that we'll definitely get into today. But on the purchase side of things, you're dealing with multiple parties. You're dealing with a lot of moving pieces. You're dealing with the initial purchase that then maybe could become the refinance, right? And as Avery was saying earlier, it is about the relationship within your book of business. And I think as loan officers jump into this industry, they don't have that book of business. So that leads me to a topic that I want to start with, which is why we think as veteran loan officers, why other lenders don't really focus on refinances, why they don't promote them, why in some cases they even give them off to someone else.
Mm-hmm. So I think it's a couple of reasons. I think number one, the fear of being shopped, right?
Mm-hmm.
You know, people want to refinance and give me the lowest rate. Mm-hmm. And then I also think it's just not knowing how to do it, right? Mm-hmm. The lack of confidence.
No, I agree. I really do agree with that. Mm-hmm. Do you have anything to add on that?
I think that rising rate environment is a big fear for a lot of people. So not putting their eggs in that basket right now is one of the reasons that I can think that a company would not focus on refinances.
No,
because we all know what's coming.
And just to kind of give our listeners an overview picture of what our industry has gone through in the last, let's say, 2 years with COVID and everything else, rates, they were historic lows. It allowed the lender to recapture business that they had in the last, let's say, 2 years prior, because rates were much higher. That rhymed. But in that instance, rates begin to rise and then it becomes more situational, correct? Mm-hmm. In those cases, do you think that that's something that should be promoted? Because there's plenty of folks that, in my opinion, from the lender side, don't work their book of business. After their customer closes, that's where that ends. And for me, on my team, we do an annual checkup with our customers. And each year, obviously, the book of business grows and grows and grows. Mm-hmm. So we can't get to all of them. It's more of a, let's put a worksheet together, a spreadsheet together with those that have higher rates or maybe still have mortgage insurance to find some type of benefit for mm-hmm. them. What about you guys? How do you go about that?
So, yeah, I mean, there's hopefully we all probably operate off of a CRM and, you keep track of your clients. I sort of pin, if you would, like my top client conversations that I've had throughout the year, whether it's a purchase or a potential refinance with a follow-up. And I always ask permission. Hey, do you mind if I call you in a few minutes? We'll see if you've got the equity. We'll see if it's the right time. I look at their debt when I'm talking to them the first time. And we potentially map out, like, you don't have what it takes right now in equity to pay off some of these things, but is that something that you'd want to do?
Sure.
Right. Some people say, no, I'm going to have a big bonus at the end of the year. I'll pay it off. Or, you know what? My God, I'm drowning. And so that's what I mean by pinning them. Okay, that's a pin. It's not time yet, but I'm going to watch it. And I think people have been super thankful, whether it's, you know what, thanks for following up, I'm not ready, or, oh my God, I lost your number and I'm so glad you called me. So over the years, I've kind of shocked myself with the amount of people that I've talked to more than 2-3 times, or transactions, whether it's purchases and refis or only purchases, because I think I show genuine interest. I really and truly love what I do. I really want to be a hero to my clients.
No,
right?
it absolutely shows.
I really do. And I appreciate that. I think that's why you and I connect. I see that in you, in your marketing. And for people that don't know, that are listening to this, I have actually never met Mark in person. Well, no, I passed
Once
you at
we
La
passed
Cantera.
by and our eyes met.
Yes.
And I was like,
two ships
that's
in the
her.
night. Yeah.
She was like, that's him.
Yeah. Totally. Yeah. I wasn't my best self that day, but you know what? I ran with it. But just, there was an immediate connection with, I think, your vibe, right? I could totally tell you just want to help people, whether they're clients getting homes or refinancing or loan officers. Like, you have this passion to develop people and add value. And I want to add value. So I like to connect with people like that. And I think that's why.
Well, I appreciate that. You got me blushing on air.
I think that's all three of us.
Yeah.
Yeah. Because that's my passion for this, is helping people and giving them good knowledge, good experience, good resource. I want to tell everybody that I work with, I am your resource.
Right.
Yes, you're going to find information on the web, but run it by me, please.
Well, I mean,
tell me what you're seeing.
Essentially will be on the web. And it's a great kind of just quick topic to discuss, which is the information. You can find whatever you're looking for, if that makes sense. If you're looking for the wrong answer, you're going to find the wrong answer. I think that it's very important for consumers, even realtors and other lenders, to have some type of mentor, somebody that they can trust in, whether it be your actual lender or a manager or whatever the case, that they can get real advice, unbiased, without any other intentions other than helping you save money, shrink terms, things of that nature. And I think all of us have that in common.
It's hard to find on the internet, is what I was trying to say.
Oh, I agree.
Yeah, this is the perfect forum to get some good, real advice.
I agree.
No strings attached.
Well, and I think that goes back to what Avery was talking about in regards to why lenders don't work their book of business, because they're scared of being shopped. Well, why is that the case? Because you have the Quickens of the world that are, and I'll be honest with those that don't know already, the reason why they have lower rates and are able to do those things is because the loan officer is making way less money. Let's just be honest, put it on the table. Is that bad? Good? I don't know. That's really up for you guys to decide, but I can tell you that someone that prides themselves 100% commission, makes a little bit more for doing that, they take a little bit more time with their customers. They dig deeper. Just like Avery was saying, they earmark you for later to have a discussion for other opportunities, both for you and for them. Does that make sense?
Yeah. And
absolutely.
you get what you pay for.
I like that.
Like, don't ever forget, you get what you pay for. So, and look, there are legitimately people out there that want the lowest rate, and they don't care how bad the experience is with the lender. They don't care. They just want the lowest rate.
It's true.
And that's totally fine. Right. I've talked to people and I said, look, I'm not the lowest rate.
Right.
So let's just get that out of the way.
Absolutely.
Here's what you're going to get. If you're looking with, you said Quicken, we'll use Quicken. You'll get what you pay for. If that's what you're in for, then you know what, God bless you. But do you know anybody else that wants a great experience? Because I'll talk to them. Right?
Absolutely.
I've had people that I didn't even close their loans send me referral after referral after referral, but just because that was what they were looking for. Right. But they also wanted to be a resource for their friends in their network. And they said, well, I wouldn't refer them, but I'll refer you.
Absolutely.
And just asking questions, right?
And I think that has a lot to do with our tenureship and our experience in, I guess, failing at not doing that. And then it becomes your passion. And then all of a sudden that's just who you are. And that's one of the things that I do coach and mentor to the other loan officers that I hire, which is become the expert. You've got to find a way to become the expert. And if you don't educate yourself on your products, on the, let's say, situational refinance opportunities, purchase, all that good stuff, you're never going to get past the sales piece of this.
God, and you know what, Mark? I'll be honest with you guys. I don't want to market that way. I don't want to pick up the phone and cold call. I don't want to do the machine gun marketing, right? Like you just freaking spray it out there and, whatever gets shot, like that's yours. No, it's not.
Or the order taker.
Yeah. It's not meaningful to me. And I'm doing this because it means something to me, which means, no, I don't want to be calling 100 realtors a week and going, hey, can I be your lender?
Right.
That's just not me.
No, you're right.
It's not me. I'm saying, this is who I am. Does that work for you? Because then this could be a relationship. Let's date. We might get married. We might not.
Absolutely. And I have a theory. It doesn't really, this topic doesn't call for it, but I think it's a good outlet for it, which is eventually in time, the realtors are going to be dependent upon us. And that stems from what's happened in the last 2 years. I mean,
absolutely.
When it comes to buying a home, most people cannot pay cash for it. And even if you can, you probably don't want to. So you've got to finance it.
Yep.
Finding a home, we've already found that there's plenty of folks that buy homes without even setting foot in them. Matter of fact, I've bought 3 of them, haven't even set foot in them before. One of them never set foot in before and after buying it.
You've never been in the house?
No, we sold it already. Okay. It took us 6 months, flipped it, done, gone.
I love it. Why not?
But I think that if we can continue to educate others like we are doing here today, they're going to see the value in what it is that we truly do as lenders. So that being said, let's get into more of the situational refinance. Let's talk about some benefits. Let's talk about types of refinances. Let's talk about some cons of refinances. Let's start with types of refinances. In the past, let's say 6 months to 8 months, with rates being so low and equity going so high, where have you guys focused a lot of your energy with the discussions with your borrowers?
I'd like to hear from you, Dionni, because I'm totally intrigued that you started this business with refinance.
It was interesting how I actually started, but I can work backwards. So recently, I have a mix of different scenarios with minor. Do have a lot of construction to perm. I have my credit union that I facilitate with, and then I do the permanent.
Who do
finance.
you use, if you don't mind me asking?
I use Texas Association of Professionals.
Okay. And I use Jefferson, but maybe
Jefferson is
over.
the second. Yeah, TAP is great. They have a great product, and I like what they do as far as the way they manage it, the way they turn it back over to me. They're very loyal with me. I don't have any concern whatsoever. They can do the resale, they can do the retail side, but they're not
taking your shit.
They're not.
That's right.
Yeah. They're not. They're we have a really good symbiotic relationship.
And before you go further with that, can you explain what construction to perm is for those listening?
Absolutely.
That may not know?
Absolutely. So buy a lot, you refinance that lot into the construction loan. The construction loan is an interim financing situation. It's a short-term situation working on a draw. With this particular credit union, it's a draw situation. And you're talking a 1, 2, or 3 time close. If you're buying the lot, that's the first closing. If you're using lending for that lot, then you're going to refinance out and get the funds to build the home. You bring your plans and specs, you've got your contractor if this is a custom situation. And that's what I deal with. Majority of my new builds are custom situation. I have maybe like a 50-50 or 60-40 of that. And then, but the thing is TAP will lend based off of my approval for the exit strategy. That's their basis. Their VP is the underwriter. She and I work closely together. I give her
Are you talking about Wendy?
Yes.
I
love her.
That's awesome.
She is awesome. So yes, I package it up for her, send it over. She sends it back to me when it's 60 days out. We lock it, we close it. We just did one in July.
Awesome.
So that's half of my refi business is more of like the construction to perm. And then the other half, I've got a mix of rate and term and cash out for various reasons. The cash out could be to purchase. A lot of it is to purchase more homes, purchase more property. That is the majority.
Now, when you say to purchase more homes, is that advice coming from you or your customers? I guess the database that you have and the folks that you've already closed in previous time, are they coming to you with, hey, here's my goal, give me a solution? Or is it you're seeing the opportunity and you're going, hey, you've got quite a bit of equity and you can kind of leverage this?
It's a team effort between the agent that referred them to me or how their relationship is with me.
Gotcha.
And what they have on their equity. I had a refi that turned into a cash out. When they spoke with their agent, they came to me. They said, actually, let's turn this into a cash out and I want to buy an investment property. So that it's basically a team conversation between the agent that I'm connected with that borrower and with my own personal relationship with them.
Okay, very good. How about you, Avery?
So I'm really particular about the agents I work with.
Okay.
So I don't.
And I'm going to clarify, I believe we can be at this point in time. Now, mind you, we don't discriminate, nothing like that.
No.
But I totally agree with that.
Yeah. Thank you for the clarification. Because no, do I discriminate? No. But are there mindsets that I'm looking for? Absolutely.
Yeah.
Like you manage your time well. You stay in your lane. Don't talk rates with your clients. Let me do that. I'm not going to talk negotiating closing costs with your clients. I'll let you do that. We kind of know where we stand, right? And
Gotcha.
It's a partnership. It's a relationship.
Absolutely.
And you do want it to feel easy, right? If I cringe when I look at your phone call, then we're probably not going to be, and vice versa, right?
I agree.
We're probably not going to be in relationship for very much longer. So for me, you mentioned this earlier, Mark, I'm the same way with regards to, I want to have the agents looking to me for leads rather than me looking to the agents for leads. I've been in the business long enough to know, man, when you're just dependent on, I need that next lead from that agent.
Correct.
I just don't ever like to put myself in a situation where I need.
Very vulnerable.
Very vulnerable.
Absolutely.
Now I can be vulnerable.
Sure.
The more you get to know me, I'm very transparent. I can be vulnerable. But when it comes to stuff like that, I need the client to know I've got you.
Right.
I have totally got this. And and oftentimes I'll say, hey, you've got enough equity to buy another property. Is that something you've thought of? The market is lending towards investment properties. The rates are really low. I've done a lot of investment properties recently, right?
Yeah.
Me too.
So I ask a lot of questions. I pretend that I'm brand new in the business with every client.
That's awesome.
And I ask them, hey, what do you want to do? Tell me.
I'm gonna spotlight that. What you just said is convincing yourself as a way of a reminder to consider yourself brand new, not to be naive. It's a tactic or a practice to allow you to get deeper with that customer. What newer to the business loan officers fail to realize is the first contact or your 1003 or your application, that is the most important piece to the remainder of your relationship with that borrower. And some can think short term, this is a 30 to 45 day relationship, or some can think big picture, that's my customer for life.
Yep.
So
That's
sorry.
what I strive
had
for.
to-
No, interject. I love it. I mean, this is kind of like my dream, right? Sitting next to people like you guys and getting to talk about this because there's always more to learn. And
Absolutely.
the more I learn, the more I can share with my clients, the more value I add. I want my clients to know I'm asking questions. Like if they call me and say, I want to do a refinance, I'll say, okay, so tell me what your goals are. It might seem obvious. This might seem kind of like a dumb question, but I'd like to know, what are your goals? Are you looking to lower your rate, your term? Like talk to me. And honestly, I can't tell you how many times if I would have just gone forward with my assumptions, I would have been completely wrong.
Right.
Completely wrong. And they give me more insight. And that's how we kind of dig down and find out what direction we can go.
In addition to it allows you to be seen or viewed as the expert because you're taking what they're giving you, you digest it, and then you give your recommendations. At the end of the day, it's their choice.
Totally.
But here's your options.
Your
and
true
here's
consult.
the benefits. Correct. Here's the benefits. Here's the cons, all of those good things. But as an expert here, based on what you've told me, your goal is, this is what I recommend.
Yep. No, there's a saying we have in my house. No one likes a know-it-all. But between us, we do have to know it all.
Damn right.
Right?
Yes.
We have to know it
You
all.
are correct.
But nobody likes a know-it-all. So don't tell everybody what you know before they've asked you. Right. So I'm dying to we're in this business. I'm like, I'm so smart. I've saved so many deals. I need you to know like what I've done and who I am and how super powerful I am.
Another reason why I do the podcast.
Yes.
It's therapeutic.
Exactly. This is just, us on our platform here, but I have to pull back and go, they don't freaking care.
Yeah.
They do not care until they ask me. Like, then at the end of the day, the person asking the most questions is the one in control, right?
Correct.
So because I am kind of a control freak, I ask a lot of questions.
I think we all are.
I think it goes with the territory.
Sure
I'm
does.
like, I need to know what's about to
A
happen.
day
here.
in the life of a lender.
Yeah.
Yeah.
What about you? Like, what is your
For
philosophy?
me, okay, so for me, in the last, let's say 8 months, I've been doing a great deal of building my personal team and getting that onto an autopilot, shifting a lot of the responsibilities over and adding brand new loan officers. But I did take, for the last, let's say 8 months, all of the, let's say, cash out refinance to leverage over for purchasing, showing them how to purchase multiple properties. I've had several folks in the last 6 to 8 months that cashed out and were able to buy multiple properties at once that didn't know prior to. It was more of a, hey, we're reaching out to just do a mortgage check. You've got equity in your property. Have you considered this route? And the answer more times than not is no, I did not. And then I've done a lot of 30 to 15 year and quite a bit of FHA to conventional conversions to get rid of the mortgage insurance.
Yes.
Those are the things that me personally, I focus on with my team and my own personal production because it's more of an expert discussion. Whereas kind of back to what we were talking about in the beginning, most lenders don't go those routes because there's so many nuances that they themselves don't even know. I mean, you've got lenders out there that don't even own homes that are giving advice.
God,
It's like, whoa, wait a minute. What do you do in this situation? And then they'll give you some BS answer versus saying, you know what, let me find out from somebody that actually knows and then get back to you.
Good
But
point.
yeah, I personally don't mind refinances. I don't market them. I have not marketed refinances per se exclusively in all the 9 years that I've been in the industry. Matter of fact, last year with the refinance boom, most companies nationally, this is not just a San Antonio or a Texas thing, were pretty much 50-50 purchase refi. And to me, that's a scary thing.
It's
Very scary.
And the reason why I say that, and you guys can confirm or deny, but once you kind of go down or you shift your business or focus towards refinances, it's hard to come back to the purchase. Why? Because you've already given the facade outside that you're focusing on that. Realtors don't like to see that too much. Some don't mind. Some even send you business. Right?
Yeah.
I have had that.
But you almost lose your relationships in that aspect, your way of marketing, the feel that you get when they actually close on their home type situation. So yeah, out of our production last year, we only had 18% refinance, but it was mostly situational. It wasn't just rate and term. And what I'm finding out there is that plenty of folks ended up refinancing just to drop their rate, but they missed all the other opportunities that were out there in their current situation. So it's like, yes, I could refinance you, but you already paid X amount to just lower the rate. I'm not going to do it again, charge you more to break even, if that makes sense. So.
It does make sense because so I kind of disagree with that.
Oh yeah, by all means.
I've heard a lot of people, oh, you don't want so much refi business. And I'm not going to lie, I was 50-50 last year.
Yeah, nothing wrong with it.
I was 50-50, right?
Everybody was.
And
absolutely.
you're right, they were. And there were a lot of people like, better watch out, wait for that purchase business. And I'm like, but if people are literally, and I wasn't advertising for refinances, I really wasn't. But if people are knocking on my door and they need something from me, I'm going to do it.
100%.
Right.
Yeah,
Although,
100%.
and I did put a video out recently about cash out refinances, kind of just sharing what's going on out there, because I have had a few stories where people, I could say I've saved them $800 to $1,000 a month with one refinance, and it's changed their lives.
Absolutely.
And that's kind of what I'm looking for. Right. But I haven't forgotten about my realtors and the purchase business. So to your point, you really do have to be intentional about keeping the purchase business fostered, alive, like tickling it on its belly.
Sure.
I'm still here, you know.
I wanted to go.
Yeah, I'm right here. Don't you worry. But the refinances, when they're there, take them, get them, but
Absolutely.
don't forget about the people that got you started, right? The people, the
balancing
agents.
act.
Absolutely. Absolutely.
I agree with that. How about you?
No, I agree. Absolutely. But I focus more on my purchases. So what I've got coming in is I do get a lot of referrals from my realtors because my realtors see the value of my experience and their clients tell them how I handled them, the customer service, the knowledge and experience that I brought to the table. So that kind of word of mouth is what has been bringing the refi business while I've been focusing on the purchase business. I have to check in with my agents. How's it going? What's been going on? I haven't heard from you lately. That kind of thing. That's what I focus on primarily.
Yeah, there's nothing wrong with either side of those.
No, but again, like if you're really geared towards, because I'm looking for people with the same mindset.
Right.
There are realtors out there that want to add that kind of value that say, look, even though I'm not getting paid on this,
correct,
refinancing is good for you. And you can talk to Avery. She'll take care of you. And then they're sending me their purchase business as well.
Exactly.
And it's building,
and
it's adding value, right?
Because that relationship is there with that agent and they trust you with their friends, their family. And that's when I tell them that is a great honor to me to be able to take care of the people that you care about the most. That says a lot. And I take that as the highest compliment you can give me.
Yeah.
And I tell them that.
I love that. She, by the way, nobody can say this, but she's oozing this gratitude, and I love it. I'm like taking it all in. I love it.
It shows a great deal of respect and value for what you do coming from someone that you see as a partner, somebody that you see that you're building a relationship. It's confirmation of your hard work and the level of time that you've spent in researching, educating yourself, doing loans. And I won't forget stumbling and failing when we were doing that.
For sure.
You know?
Yes.
So let's shift into some benefits. You know what? I almost want to talk about some situations where folks refinanced, but it probably wasn't the right thing to do. Or we can save that for last.
Whatever.
Let's jump into that.
You go.
Those are mostly the things that I say, this is not a good time for you.
Right.
I just kind of catch that. I want to be able to sleep at night. I'm my conscience, I have a conscience as a loan officer, as a lender, I have a conscience, and I cannot in good conscience do something without saying, hey, if you really, really must do this, I'll do it. But it's against my better judgment and expert opinion. That's what I'm going to tell you.
Okay.
So I'm kind of transparent. Well, not kind of. I'm very transparent. If it's not the right thing, I will put the full stop. And, if they actually persist, I'm not going to say, okay, go to somebody else to do it. Then I'll do it. But for the most part, I stop it before it starts.
And I guess you hear quite often, I hear it from consumers, lenders, and I hear it when it's time to sell, but there is if it's more than a half a point or a quarter point, then it's totally worth it type generic concept. Does that make sense? Do you guys hear that?
Absolutely.
Run the calculations.
Run the calculations is the correct answer.
What is the savings over time? That's what you're going to need to explain to them.
Dependent upon the situation.
Exactly.
Because you do have situations to where folks are getting divorced. You've got relatives that property was passed to them that now needs to go through an ulti deed to be able to pay out the other siblings. There's so many situations that I believe, if you are a lender out there and you want to focus on refinance business, go get in touch with divorce attorneys.
Yes.
Financial
planners, all of the folks that end up dealing with the life
circumstances.
Correct.
Death and divorce.
Death and divorce.
Yeah.
There you go.
Exactly.
The double Ds.
Yep. Yep.
I have a file right now, actually. It's a new build with a spec builder, and the builder couldn't figure out how to get it done. And they actually asked me to tell them how I did it, and I wouldn't, because learn your job.
Don't give away your secret.
I'm not going to give away. I'm not going to tell you what I've got in my hand.
Teach other people how to do their job.
So, exactly. So I said no, but what I will do is provide you the conditional approval that you need to continue with the contract in the building and keep this buyer. So she owns a home, and this is the reason why they couldn't figure it out. She owns a home. It was given to her in the divorce. The note is in the husband's name and it's an FHA. The ratios were too high. So I said, okay, well, this is what we're going to do. We're going to structure the new build a certain way.
Right.
You need more money down. Let's refinance your current home. Get your ex-husband off the note. Take the cash out that you need. And you're going to be in a conventional, no more mortgage insurance. So it was a win-win-win for her. And they couldn't figure out of course, the new build is not, the builder lender is not going to do the refi. They're not even going to touch it. So I was able to do a complete package for this girl. And she is so thankful. And that's what I do this for, is the thankfulness. I actually brought that value, that consult.
And your comments actually allow me to give tidbit of a topic that I'd love to discuss later, but not at the moment. But builder lenders, I'm not going to say all the way that they are like a Quicken paper pusher type situation, because I do know some pretty solid builder lenders out there individually. But as a whole, you are correct. They're not going to take that extra time to learn about their customer, educate the customer, and dissect their situation to be able to put something together that makes sense to move forward. Why? I don't know. They lack of experience. They're not paid enough. They don't have enough time because they're on to the next one because they're just filing in. I don't know, but it's just something for you guys out there to think about.
All of those things, for sure.
They're numbers.
Yeah.
They're spec homes. They're one right after the other. They're boom, boom, boom. They're paid a salary. They're not paid like we are. I wanted to touch on something that you had said on the Quicken scenario. Mm-hmm. Yes, they are paid less, but it is commensurate on experience. There is a reason, and they are paid differently from us, but we have the experience. The value that we bring to the table is in our experience and our knowledge, not the online lender kind of scenario.
Sure. And I guess the coolest part to this whole Quicken discussion, I don't know, is since COVID occurred, we're kind of online lenders too now. And in my opinion, it kind of increased our value because we shifted over. We're able to make the transition with your Teams video calls, your Zooms, things of that nature, showing grandma, grandpa how to use Zoom. And then they're thankful and grateful to you that they can use it with their nephews or whatever, their grandchildren. But we came with the experience as well. The Quicken folks, yes, they've been doing it this entire time, but it wasn't something that was super tough to adapt to. I mean, I'm sending out still when I'm producing, and it's mandatory for my loan officers to send out a Zoom invite so that they can actually meet their customer. It's almost no excuses to not do that, in my opinion.
Agreed.
So yeah, that was the Quicken thing. Anyway.
Yeah, I think the online lenders should be scared.
Yes.
Better Mortgage. I'm sure you guys all saw that. Did you guys see the headline of the Better CEO that laid off 900 people?
Oh, yes. I read that in the Wall Street Journal. Yeah.
Yeah. I mean, I remember during COVID, I had somebody leave me for Better Mortgage, right?
Turns out it wasn't better.
Yeah. It turns out it wasn't better. But I mean, I think that goes back to kind of what you're talking about. I think they should be scared of us because we are sort of morphing into the online lending as well. I mean, I'm the same way. Every client of mine is, do you either want to meet me in person or do a Zoom call?
Absolutely.
Right? Hey, I think there's one in every 50 that is a phone call just because of inconvenience, but we're getting out there. We're adding value. People are seeing these stories of online lenders just crushing their people like commodities and getting rid of them. And I think this is kind of a culture now that we got to appreciate people.
I agree.
Take care of them.
Now, when you said you had somebody leave to a Better kind of an online lender, did they do it because it was easier to sell rate?
Absolutely.
I figured.
Absolutely. And I was fine with that because again,
value.
Again, like I'm okay. Like if you're not my client,
right?
I can tell you, you know what, this is not going to be for you and I will hate it. And so will you. So go over there. It's totally fine. And they ended up calling me later and they were like, you know what, I think this is really hard. You were right. But I still said, stick with it.
Absolutely.
Just you're in it too far. Just it's almost done. Just bury your head in the sand and get it over with. But it was painful.
And as a caveat, I don't want folks to think that Quicken is bad or Better is bad, anything like that. But when we talk about low rates and how they're able to do it, I just want to bring it back so that they understand, listeners, they do get paid less. They have less resources. It's almost call center environment that is allowing them to have lower rates. In addition to that, most lenders, if you're a mortgage lender or mortgage banker, play around the same rates every day. We're on the same playing field. We may be an eighth to a 0.25% different given a single day, and companies do make decisions to drop their rates for a short period of time to increase volume. But truly, it's a game that you guys out there are being played, not that we're playing with you. We're pretty much around the same ballpark. I mean, I shop all the time. Being that one of the founders of Review My Mortgage, I work with lenders nationally. And especially when COVID happened, we were like, oh my God, did you guys' FHA rates go through the roof? Yes, they did. Not only in Texas, but all over the United States. So it was nice to be able to confirm those things, that we all are kind of making the same decisions as a whole so that we can continue in this industry. So refinances.
Like I said, I'm not scared. The reason why I think I focus a little more on it now, I'm not saying, we talked earlier, I don't want all of my business to be refinances.
Sure.
but I do want at least 20% of my business every year to be refinances. I like them. I can move them along. The clients trust me. It's like autopilot. I'm not bothered, quote unquote, meaning there's not a title company bugging me.
Correct.
There's not a listing agent, are we closing on time? Yes, I always close on time. Like, why are you bothering me? Right. And I love agents, right? But it's a different scenario where I'm kind of like, I'm in charge. This is my domain.
Right.
And the client trusts me implicitly. So I do want more of that business.
Sure.
And there are people, to your point, that are running away from it, that are saying that's not for me. So when I see something that people don't want, then I'm going to go, all right, then that's me. I'll be that person.
Sure, you can fill that niche.
So I think first 20% is a very healthy balance with probably the book of business that you have. I think that is a great balance and mix within our industry to stay consistent and to keep current with your book of business. To your, I think, alluded of why other lenders don't participate as much as they should. I'm going to bring it back to most don't know how to set up a refinance properly. They may get the concept, but there are a lot of nuances that everybody's selling with low rate, skip 2 payments, get money back in the next 30 to 45 days from your current escrow. And they don't realize that we're in, let's say, October, November, December. You're not getting any money back. You better collect for all of those taxes.
Oh, yeah.
And then they also promise folks 0. You're going to come to the table with 0. And lo and behold, you didn't set up your fees accurately, or you didn't do your impound correctly to where now you got to come to the table with $3,000, or we're going to add it to your payment.
I mean, the impound calculation itself is scary enough because you're like, okay, when did you close for the homeowner's insurance? Let me calculate that. Okay, like how many months of taxes plus, and then, okay, wait, do I collect that? Do they not collect? Then you have to have the conversation with the client. There's some clients that are fine paying it at closing. Then there are others that are like, wait a minute, you're eating into my equity now.
That's right.
With that much money. I mean, it could be as much as $8,000 or wait, or I've got a few right now. I'm playing the waiting game. Like looking
you
at
might have to, yeah.
You're playing the wait. Are the taxes paid? Are the taxes paid? Are the taxes paid?
I have the same right now happening.
It's annoying, but I'm willing to do it because nobody else is going to do it.
Correct.
Right. Not nobody, but
No,
you know
but
what
I get
mean.
it. Absolutely.
But yeah, I mean, the goal, backwards math, right? The calculating LTV. What do I need your house to appraise for this to make sense? Like those calculations, I swear to God, I was in high school and I'm like, I'm never going to use this math ever.
I hated math in high school.
I hated it because this is like a personal story, but I had a teacher that made me think I was totally dumb because I was getting a D in, I think it was Algebra 1. I was getting a D. I couldn't freaking figure it out. So I'm like, you know what? I'm going to go to tutoring. I go to tutoring and it's the same teacher teaching the same way. The overhead where she's just doing the long math and the overhead. I thought like I could still remember like the room spinning and going, I'm like, I am forever doomed to be dumb. I don't get this. Right. Then I went to college algebra and I aced it. So I'm like, okay, thank Jesus I'm not dumb. And never in my life did I ever think I was going to be doing anything in finance. Lo and behold, I'm doing algebra.
And fell in love with it.
And I freaking love it.
And you're damn good at it.
Well, thank you. I love it. And so I'm going, okay, if I do this times 100 divided by 80 and X equals, like I'm doing it. I want to call that teacher right now and be like, you wench, look at me now.
That's awesome. That's awesome. So when it comes, and this is kind of a tip for consumers, if you are working with a lender initially and they're able to give you some figures with bottom lines, the whole 9 yards, that this is what you're making your decision on, but yet they haven't asked you for your closing disclosure and they have not asked you for your insurance binder to know when the insurance starts. They're shooting from the hip. They have no clue. By the way,
you don't need an insurance binder to find out. You just look at the credit report.
Correct.
I mean, come on.
What do you mean?
I mean, really, you just look at when the house closed, or you can go to the
I get that.
Yeah.
But then the insurance piece is when, I mean, we own an insurance company. So, I mean, people are switching insurance all the time and for
that's true.
Weird reasons. It's like sometimes they closed on their home with this rinky-dink insurance just to qualify. Right. Now
Totally.
they're putting their big policy in place.
Totally true.
So, I mean, there's just one of those things that most of the time, and this has to do with purchases as well, but for refinance is very important. If the lender doesn't have all of the things that they need in order to give you that information, they're truly just trying to get the sale. And then you're going to find that stuff out later in process.
Yeah, well,
which
and
is
then
sad.
like what happened, to your point, what happens is they go, okay, you credit qualify, LTV, it looks like it makes sense. I think it's going to be worth this. Let's see. And then the poop hits the fan.
Oh yeah.
With the appraisal.
When it doesn't
With
appraise.
the appraisal.
Yep.
Title comes in. Oops, you've got a lien on your property.
Yes.
They didn't even know about. How do you have that conversation?
I've actually had two of my refinances are sitting right now because of liens that they did not know about.
Mhm.
And one was the prior owner. So yes, it can turn into a major nightmare.
Or how about solar panels?
Oh,
Yes.
Ooh, that's a whole other discussion. I mean, when they don't know, or it doesn't
don't
show
know
up on
it's
the credit
leaned on
report.
the
So
house.
yeah, they don't know it's
Yeah.
leaned on. What are you talking about? It's a lien on my house. I'm like, oh Lord. I'm like, sit down.
Yeah.
So yeah, I mean, I've had to like freaking sweaty armpits reworking this. Like, oh my God, those are just some of those mistakes that you make.
right.
You don't think, okay, I know this isn't showing up on the credit report as a solar panel, but that's a pretty big number.
Absolutely.
Right? Let me ask you, do you have solar panels on your house? Like anything that you did? Like,
And it has to do with asking the questions,
Asking
being
the
the
questions.
professional things that we've gone through, failed about
Mhm.
on, and learned. I need to incorporate this into my discussion with them. You talk about solar panels. One of the things that I'd love to get people to understand that are listening, if you're a lender out there, don't ask the borrower what they think their property is worth when
Mm-mm.
you're doing a refinance. Okay. Just a pro tip.
they'll get you every time.
Yeah, absolutely.
Yeah, no.
Because to them, just like as if you were appraising your own home, everything that you've done to the home adds value when it really probably
I
doesn't.
fixed the stairs and I added a new window and a little nook. It's worth definitely $50 more.
We just put our Christmas tree up. That's got to add a little value, right?
Exactly. Yeah.
Yeah.
Oh, sorry. The pool doesn't add that much.
No, and that's true.
It's got a waterfall.
And there are situations to where you're reviewing a loan and giving the options. And yes, they have equity and their goal is to consolidate debt, more times to go ahead and get into more debt. But I see, let's refinance the house to add a pool. My first question to them is, how long are you going to stay in it?
Mhm.
When others, they just, oh, yep, that's a good idea. You qualify, sounds good. Then in 2 years, they go to sell and it's like, whoa,
Yep.
I'm only getting $20,000, $30,000 for that $100,000 pool.
Absolutely.
Yep.
Absolutely.
And it's just, I think, a disservice that I can't even say inexperienced lenders. It's just some lenders that don't want to take the time, don't have the passion for what we do, tend to shortchange the process.
It just takes more brain power.
Mhm.
It's really what it is. Like a purchase is a purchase. Here's what it appraised for. Here's what you're putting down. Like, boom. But a refinance is, I mean, it's a little,
There's more thought to
there's
it.
so much more thought,
Yeah.
so many more moving parts. Like you
Yes.
said, like, what does the debt sheet look like? What's the loan to value? I know nobody's going to like this, but AUS will hit Zillow and go, what is it worth? It's just an algorithm.
You're right.
And I'm not saying anything other than it's an algorithm and it helps me get what I need out of my numbers, right?
Totally get it.
Sharing those kinds of pieces of information with your client. Like, look, don't look at Zillow and think that this is what your house is going to sell for, but it's helping me put up these numbers for you. This is how it's
Right.
going to make sense. Do you want to pay taxes? Do you not? Maybe they don't want to escrow anymore.
That's another question
one.
that
Yeah.
most
Mhm.
don't ask.
Right.
They do not.
It's about the time and it's about the communication.
Mhm.
And that's whether it's purchase or refi business. A lot of times lenders are not taking that time. They just need to slow down. There's a lot going on. The last 2 years have been gangbusters, but you just need to slow down and take that time. And that's where that's another area that we bring the value is in just slowing down,
Mhm.
ask the questions. I spend time on the phone or in front of them. I take the information. We have a conversation. We talk about all kinds of things, not
Mhm.
just the information I'm collecting for the app. I get more knowledge of how I want to evolve. I ask the question, how long are you going to be in this home? Do you really think it's worth it? Because this is what your savings is over time. And this is what you're going to do, how long you're going to take to break even of the
Mhm.
closing costs that you're adding to your loan. So all of these things just need to be discussed and it's time.
I agree.
I think the biggest piece is that as a lender, we are not selling rates anyway. It's payment or cash. I can get you a higher rate and a lower payment than that lower rate mortgage down the street.
That's so true.
Yes.
Matter of fact, we had on this podcast, I think our second or third episode has to do with that concept in itself. Is we have been trained by media and big bank to think rate when it should be, let me take a step back and dissect my situation to see if rate really is the biggest factor that makes sense for me to focus on, where it could be cash to close, like you said, or monthly payment. And there are programs out there that will allow the lender or the borrower to pay their mortgage insurance up front completely.
Exactly.
I mean, you could even go into 80-15-5 type scenarios, put in
Totally.
a second
Yes.
lien,
Yep.
but we don't, I'm not going to say we, because I do. Most don't. So as we continue this discussion, I want to spotlight a couple of specific scenarios that one would benefit from doing a refinance. We've talked very generalistically, which is nothing wrong with that. I just want to give them a couple of scenarios that if a consumer's listening right now, they may go, I may need to reach out to my lender because they're talking about me. Does that make sense?
Yeah.
So if you guys could rattle off a couple of different scenarios that would make sense, great. And then we'll jump into maybe some cons and then we'll wrap it up.
I think FHA to conventional is the biggie. First-time home buyers especially, they're going FHA a lot of the time.
Right.
Maybe not in the last year because we all stretched it to go conventional on a purchase, but that's a huge benefit with life of loan mortgage insurance. Getting rid of that and going into the conventional.
And what would be the benefit for a consumer?
To get rid of the mortgage insurance.
Very good. And
lowering the payment.
I.e. thousands and thousands of dollars.
Which it will never go away. The mortgage insurance on an FHA it's life of loan, literally life of loan.
Correct. And let's say somebody comes to you and says, well, yeah, you said I can go from FHA to conventional, but my FHA interest rate was 3.5 and my conventional rate's now going to be 3.875. Why would I do that?
Look at the payment.
And then you would basically just dissect
Sell
it.
the payment.
So and
that's
here you
what
go.
That's what you have to focus on, not the interest rate, because at the bottom line, bottom line payment is what you have to focus on.
And who would be someone that would potentially out there benefit from this? How would someone know without going to a lender? What's a factor that would go, maybe I should call a lender to see if this is something I should do?
Maybe if they've heard where their value of their home is, recent sales in their neighborhood would give them an indicator of we have some equity here to work with.
So those of you listening in the last, let's say, I'm going to even go far as the last 3 years, we've seen constant growth in our values. Typically, it's around a 5 to 6% year over year growth. We've seen upwards of like 13%. It's crazy right now. And most would think that it is a inflated market, things of that nature. I don't believe so. I'm personally an investor. We're in Texas. Our values have never gone backwards. If you're in a different state, obviously check with your lender or local realtor to understand what your property values are doing in your area specifically. But you're right. I would say, gosh, 80%, if not more, of the folks that have purchased in the last 3 years under FHA or a government program other than VA potentially have the opportunity to get rid of a chunk of their payment without having to do much. Right? Okay.
Absolutely.
How about you, Avery? Any other scenarios that would benefit?
I'm really liking the cash out option right now because of the equity growth, right? I mean, the average right here in San Antonio area, your average equity is increased by about $50,000. That's a lot.
Sure.
Right. So now I'm thinking, all right, in February 2022, people are going to have to start paying their student loans
too.
Right.
Yep.
So, hey, do you have at least $20,000, $30,000 in student loans? I mean, how many credit pulls do you do with student loans on them?
90%.
Right? Like 90%. So do you want to pay those off? Do you want to get that monkey off your back? And then maybe then some, right? So I really like that idea. I like telling people, hey, get rid of your student loans. You didn't like paying them before. You're not going to like paying them now. Right. I think budgets are going to tighten up in this next year. So giving people that breathing room is definitely something that people should be thinking about.
Now, do you go through in those scenarios and kind of, I don't want to say dissect, but line item their current debts to ask, hey, what's your interest rate on this? What's your term on this? Does it make sense to use some of these funds to pay this one off versus this one?
Absolutely.
Okay.
I'm glad you brought that up because I absolutely do. I just was on the phone with somebody previously and I said, look, here's what you want to do. You want to look at what is the highest interest rate loan that you have and let's pay that one off first. Let's go backwards from there. Because of course the cost of money for them over time, that's what we're looking at. Because I want people to know, look, I'm not just a in the moment transactional kind of person. Right. This is about wealth strategy. How do we get you set up and fix your credit score at the same time? You pay this stuff up, your credit score is going to go up. You're going to have more cash in the bank. You can get that house that you want. Single guy, you can get married and pay for that wedding.
There you go.
I've talked to so many people just because I'm curious, right? Be interested, not interesting.
Absolutely.
And so I learned so much about people. And that's kind of where I've gotten to love refinances because I've found out these little things that we can do. Maybe don't pay off your car. It's going to be paid off in 3 years anyway. Like who cares?
Right. Spreading it over 30 or 15 may not be the answer.
Exactly.
And I was waiting for one of y'all to say that. And I don't think that that's something that, I don't know if it's most lenders or any of it, just lenders out there don't tend to bring up as a talking point when they're having these discussions. You'd like to consolidate. Great. How long are you going to be in the house? Okay, great. You're going to take this auto loan that's at 3% and then refinance it to a mortgage that's 3%, but you just went from compounding interest to amortize. I mean, it's like, whoa.
Yep. It blows their mind. They're like, I didn't even think about it that way.
Correct.
So you pick and choose what you're going to.
Absolutely. And for those listening, I want to make sure that you guys understand what amortization is and how, I like to say, the bank gets theirs. Essentially, your first, 9-10 years of your mortgage payment is 80-90% interest. So the bank is going to, the lender, the servicer is going to get their money regardless. So you taking your refinance and stretching it back out, you may have just counterproduced what you were trying to accomplish. I think if you are looking at options like that, the first thing you may want to look at is shrinking your term as well. And this is something that I just thought of is if you are, let's say, adding, I don't know, we'll call it $30,000 worth of credit card debt that's at 18% to your mortgage over time, obviously that's going to cost you quite a bit. Let's say your monthly payment on those credit cards is $1,000 a month and your mortgage is $1,000. And now you add that to it and your mortgage is now $1,100, right? And use simple numbers. Why not take that extra $900 and apply it towards that principal?
Exactly.
Like as if you were still paying your credit card debt and you're killing your principal.
Yes.
It's a concept of kill the P.
Yeah, that's exactly right. I've talked to clients about that and I've said, look, you're cheating the system a little bit here by overpaying your mortgage.
Right.
How about split payments?
Absolutely.
Some banks don't let you do that because they're smart enough to know that's killing their business. But the ones that still allow it, I'm like, split your payments. That's not even, I mean, it's like making one extra payment a year.
Exactly.
Kill the interest. You can take 6 years off that loan right away. And people get excited about that. Like, wow, I didn't think about that. And that's what excites me. I'm sure you too, Dionni, because I can see she's getting really excited here like this. You're like, it's kind of like, I never thought I would be this nerd, but I am.
I'm a total geek.
I agree
total
with that 100%.
No, I'll tell them when they come to me and they say, oh, I want to go into a 15. And I'll tell them, okay, well, do you understand what that monthly payment's going to be? And it's going to strap you to that. But if you were to say, take it to a 20 or 25 and not take it out to another 30, but take it down to that, then you'll have more control over your monthly payment. Put that extra money still on the, but you won't
pay your 30 like a 15.
Say something happens in your life, then you'll have more control over your funds monthly. So I do consult in that way as well.
I like that. I really do. Ladies, this has been an awesome show.
It's probably your most awesome show.
It's probably my most awesome show. I'm just saying. The idea behind this was to educate as many as we possibly could nationally on refinances, whether to refinance or not to. And it really starts with a goal that they may have or an opportunity that they may see. And if folks are not a little curious to find out what the potential of those options are and how they can benefit them, then truly they'll never see the benefits of it. I think do your best to educate yourself prior to speaking to a lender so you don't get pigeonholed into one product or something that benefits them and not you as a whole. But overall, as always, it's about education. If you are working with someone that is educated, their goal is to listen, digest, and then give you their honest and unbiased feedback based on their expert opinion. Is there anything that you ladies would like to say to leave us with? Tips, advice, anything like that to close us off?
I would say this is what I say all the time. I'm like a broken record. If your lender's not giving you two things at the end of every conversation, and those two things are confidence and clarity, then you should probably keep searching.
Okay. It's not like money in a black eye.
No,
right? Okay.
Not money in a black eye.
Good.
Confidence and clarity.
To the consumer, I would say if you've been waiting to refinance, now is the time. You're not going to see it come back. They're going up. So if you've been on the fence, now is the time to refinance because this is your last chance.
Absolutely. And I think in us being transparent, that's what we believe rates are probably going to continue to do, which is rise and stabilize. But if you asked us, what are rates going to do? We really don't know.
There is no crystal ball.
If any one of us three knew what rates were going to do, we wouldn't be doing this.
Yeah.
Yeah.
So I'll leave you with that. I hope you got some good nuggets from this. I'm your host, Mark Jones, and this is Key Factors.